Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Let me just give everybody a 30-second warning. If you have any other questions for Stan, type them in. Let's see if I see anything else.
There's a question on the currency options spreads. I'm not quite sure what being.
Oh, okay. Is that in the Q&A? I see. Question about why are currency option spreads higher than equity option spreads. First of all, it's a brand new product, but what you'll see is that dollar, euro, dollar, even Canadian, you'll see the spreads are. They're never, I shouldn't say never, they're probably not going to be as tight as SPY or the Qs if that's what you're comparing them to. But if you're trading technology stocks, you're going to find that these are much, much tighter. So it really depends, and people always ask me, what's a fair width? A fair width, when you think of it, is going to be dependent on how these market makers can hedge. So as I said, dollar euro is going to be the bid-ask spreads are very, very tight. If you look at dollar Australian or dollar New Zealand dollar, you're going to see wide spreads, and that's because those products, the volatility is much higher. So we think that the spreads will continue to narrow, but there are ways around some of the tight spreads, and one would be spread trading, and another, of course, would be if you're thinking about options, you don't have to, and I'm sure, Stan, you probably make this, I'll give this idea out that, limit orders are fine for a lot of different products. Market orders, I call market orders of orders of urgency. If you need to get out, yes, you use a market order, but limit orders, there's nothing wrong with that. You have any points on that, Stan?
Years ago I used to tell people that this was in the world when we had more floor traders, and I was one of them, that you have to be willing to pay for liquidity. You just don't have to pay a lot. So using a limit order somewhere within the bid and offer, somewhere around a reasonable price, is saying that, look, I need a market from a market maker. I just don't have to give him his price right away.
That's exactly right.
I can see if he'll come to me someplace, but we all want to trade, and to get in and to get out, there's going to be a fraction somewhere along the way to execute. Again, you just don't have to. You just don't always have to pay the sticker price right away.
Good point. Hopefully, we can be patient. Now, the problem is, and I've been there also, is if your position's too big, whether you're too short or too long options, and you have to get out, that's a problem. So that's why you want to manage your risk each and every day. I know it's easier said than done, but if you end up too long or too short options and then you have to get out, as Stan said, then you have to pay the sticker, and it could be trouble.
Yeah. I'm wondering also, maybe next time around we'll take a look at some things like volatility skews on the currency options. I wonder if that has to do with some of these spread relationships. And we'll take a look when we get a minute, Stephen. Maybe we'll talk about that, and we can do something on the skews.
Absolutely, Stan. Stan, I think that we need to wrap it up here, but I'd like you to just, have a closing comment, if you will, and then, I'll close it up from the ISE's perspective.
Sure. Well, I certainly want to thank you, Steve, for the invitation, for having me back again. Working with people who understand trading, understand risk and risk management. That's one of the reasons that actually Steve and I have really hit it off, and I have a lot of respect for his knowledge and his candor as an educator and in representing our industry. Anyone who sugarcoats it, there's tremendous opportunity, but we need to get there the right way, and Steve always expresses that well and makes working with the ISE a pleasure. I think we certainly hope at TradeStation that we could serve you. I think one of the strengths that we have really is that multi-asset platform. To have one platform where you get your data, do your analysis, do your trading, and it covers stocks, futures, options, Forex, all in one package. It means as you develop your analytical layouts, as you develop your style, as you develop the data layouts that you want and your understanding and your strategies, you can apply them to different markets without having to adapt to another platform or set up something else with a different broker. It's really a turnkey, an all-in-one solution for the trader of data, analysis, trading, multiple assets all in one place. And I hope we'll be able to serve your brokerage needs.
Well, Stan, I want to invite you back, and so I'm sure that late this fall or early in the winter, you'll be back, and we could look more at volatility, because I find that fascinating. In fact, all my years of floor trading, that's what I did. I really compared implied vol to historic vol, and then came up with strategies that I thought were best, although we didn't have all the technology that you guys offer at TradeStation. Of course, technology is not the holy grail as far as just because you have technology does not mean you're going to be successful, but technology helps you get through all the work. So you can see at TradeStation, they give you an ability to look through a lot of different strategies. Of course, you, the investor, would have to decide which one ultimately is right for you, but TradeStation could be a great choice for all the attendees today. Stan, I want to thank you again. Great job.
My pleasure.
I really appreciate it. So I want to thank Stan for all the hard work that he put into this presentation, and I want to thank all the attendees for spending the last hour or so. We all know that we have busy schedules. So thanks again for joining us here at the ISE on this Tuesday, and we'll be back next week. Jack Crooks will be back with us talking about the currency, the U.S. dollar, and the U.S. dollar, the ability for that to be the reserve currency. So this is a question that he receives often, so he thought it'd be very timely. But again, if you're searching or seeking out a broker, please consider TradeStation. And let me just remind everyone, you can go to s-@tradestation.com or call 800-808-9336, and you can get in contact with TradeStation. Stan, thanks again.
Thanks, Steve. My pleasure. Thanks, guys, for listening.
Here, on behalf of the ISE, this is Steve Meisinger, your host, saying have a great evening and have a safe trading day tomorrow, and come back next week. Jack Crooks will be with us, again, talking about the U.S. dollar and its potential that they might lose its reserve currency status. So thanks again. Have a good night. Bye now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.